Annual Wealth Summit, powered by CNBC TV18.com. Please put your hands together for your host, Mugdha Kalra.
Hello and a very warm welcome to DBS Treasure's Annual Wealth Summit Delhi chapter, powered by CNBC TV18.com. I'm your host, Mugdha Kalra, and it's a pleasure to see you all this evening. Together, we embark today on a journey to explore the dynamic landscape of wealth management, an industry undergoing profound transformation. Ladies and gentlemen, the wealth management landscape in India finds itself at a pivotal juncture, facing a convergence of disruptive forces reshaping its very foundations. We observe a significant wealth transfer from older generations to a much younger tech-savvy cohort, accompanied by a surge in demand for innovative digital solutions, which are also hyper-personalized in these days. At the same time, new players are emerging, challenging the status quo, challenging the very fabric of how the industry works, and pushing traditional wealth managers to now change, adapt, and evolve. The market landscape is shifting, and incumbents must act now swiftly to safeguard their position and stay ahead of the curve. This confluence of factors present both challenges and opportunities for wealth management professionals everywhere. How can they leverage technology to enhance client experiences? What are the strategies that will enable them to navigate through this era of disruption while safeguarding and growing their client database and wealth? These are the critical questions that we are asking, and we will be exploring in depth today through our event. So let's dive in and uncover the secrets to thriving in the new era of wealth management. Without further ado, may I first please invite on stage Mr. Prashant Joshi, Managing Director and Head Consumer Banking Group, DBS Bank, to deliver the welcome note address. Sir.
Good evening, everyone, for coming here for the second leg of the DBS Treasure's Wealth Summit, the inaugural Wealth Summit, which we have started with in this year. Last week, we had this in Mumbai, and just as in Mumbai, I see a fabulous crowd here as well. So very warm welcome. Thank you for coming here and gracing this occasion. When we were planning this event, a lot of people said that there couldn't have been a better time for this event. Because markets are at lifetime high. Genuinely, wealth is getting created, not just what used to be the preserve of old metros, but in the Tier 2 and Tier 3 cities. But in our view at DBS, actually, any time was as good as having this summit. For two reasons. One is that we don't look at wealth and wealth management as a market-linked phenomena. Wealth needs to get created, preserved, and grown, over generations, passed on over generations, and economies grow and prosper and generate wealth. So it's not something which wealth management is not a topic which you don't discuss when markets are down and discuss only when markets are up. So clearly, as I said, any time could be as good as this time, and I'm glad that we are doing it here. DBS has been in the country for over 30 years. And now we have 2.5 million customers, across 349 cities, and in all kinds of Tier 2 and Tier 3 cities as well. We are engaged in corporate banking, SME banking, consumer banking, and wealth management, which is a part of the consumer banking, is something that's been growing very, very fast over the past several years for us, just as the entire industry is also growing. And therefore, what becomes important, not just in the context of wealth management, in the context of the bank also, is the heritage that we have got from Singapore. And we take a lot of pride in that and build on that in India as well. In wealth management, we offer Treasure's proposition, which is in India, Equal Treasure's private client proposition. And in Singapore, of course, we have the DBS Private Bank. And I know some of you are customers of the DBS Private Bank who are present here. Thank you for being here. And equally, the family offices, which has become a big source of wealth management over the past 5-10 years. In fact, in Singapore, we have close to 1/3 share of the family office business as well. But as I said, markets will be up, markets may be down, wealth management trends may keep changing. And we do hope that through this event, we are able to capture some of these trends and establish thought leadership in the area of wealth management. However, something that will never change in wealth management is the basic element of trust. The trust that clients have in the institution, and that trust gets built and derived on the basis of two fundamental principles. One is competence, and the second, even more important, integrity. So competence and integrity will build trust, and which is what eventually customers will look forward to and look for. With that, again, I welcome you to the event, and I look forward to engaging discussions with all of you. Thank you for coming again. Thanks again.
Thank you, Prashant, for setting the tone for the event. Ladies and gentlemen, let's move on. In an era of dynamic global markets and evolving economic paradigms and economy the way it is, India stands at the forefront as a beacon of unparalleled potential and promise. And as we gather and embark on this journey together to explore the myriad avenues and strategies that can unlock the vast treasure trove of opportunities within India's thriving financial ecosystem, from burgeoning sectors to innovative investment vehicles, our discussions today are going to delve deep into the intricacies of navigating this vibrant landscape and harnessing its full potential for profitable returns and sustainable growth. Our upcoming keynote address, titled Unlocking India's Financial Investment Opportunities, shall try and unravel the tapestry of India's financial future and chart a course towards prosperity and success. And for that, let me take this opportunity to invite on stage Mr. Sanjeev Sanyal, Member, Economic Advisory Council of the Prime Minister and Secretary to Government of India.
Thank you, ladies and gentlemen, for giving me this opportunity today to speak to all of you. This is, of course, a particularly exciting time to be Indian and be in India. This is, and I hope at the end of my talk I will have convinced you, this is not just a turning point in Indian history, it's a turning point in world history. And you have to think in really long horizons of time and able to appreciate the kind of shift that we are already undergoing and will see in the next decade or two. Now, all of you are aware that India is currently the fastest growing economy in the world. We will be this year hitting a GDP of about $4 trillion. If you had asked me till last year how that would pan out over the next few years, I would have said that at some point in time in 25, we would become the world's 4th largest economy, and some point in 26, 27, we would become the world's 3rd largest economy. But as things are panning out, with the sharp drop in the yen, Japan's economy is now just above $4 trillion right now, which means that, our economy will actually bypass Japan's within the next 12 months. Unless, of course, the exchange rate goes ori again. I mean, one shouldn't trust exchange rates, but I'm just telling you the yen movement for this particular purpose has certainly played to this ranking. And Germany's economy is not too far off. It's at about $4.5, $4.6 trillion. So you're looking at maybe 18 months, maximum 24 months from now, when India will become the world's third largest economy. So despite all the sort of hits we took from COVID and so on, we are not too far off from the trajectory we had laid out when we talked about a $5 trillion economy. We should be there in about 2027, 28, thereabouts. But we will, ironically, in terms of ranking, have been able to hit it ahead of schedule. Because, as I said, growth in the world's fourth and fifth largest economies are basically, third and fourth largest economies are basically stalled, and the exchange rates are moving in our favor. Now, all of that is great, but in fact, we shouldn't see India's rise in terms of even this, whether it's annual growth rates or quarterly growth rates or even the election cycles and so on. What you're seeing is truly historic if you take a longer-term perspective. And given the vagaries of exchange rates, we need to think about this in purchasing power parity terms. So let me tell you what is going on. So I've got here with me the long-range estimates from a very famous study by Angus Maddison about how, in the very long run, our position in the world has changed. Now, you may have already heard that 2 centuries ago, in 1820, India and China together accounted for half of the world economy. Now, that is a bit misleading because at that time, China had already begun to dominate the economy. In fact, at that point in time, in 1820, China accounted for 33% of the world economy, and we accounted for something in the range of 16%. So, in fact, China was already doing the heavy lifting 2 centuries ago. So, to understand what is going on, you need to go back and take a much longer horizon of things. So, let's start 2,000 years ago. Okay? In the year 0, or 1 AD, India's economy accounted for 33% of the world's economy. It was 1/3 of the world's economy. At that stage, China's economy was the second largest economy at 26%. And just to put it in context, all of Western Europe together accounted for 11%. So we were 3 times the size of all of Western Europe put together. Now, for the next 1,000 years, we remained comfortably the world's largest economy. So by about 1,000 years ago, 1000 AD, we were 29% of the world economy. So our share had come down just a dot. China's economy, oddly, had come down even sharper to about 23%. Then the next 500 odd years, our share dropped. As many of you are aware, we were invaded repeatedly. The Turkic invasions and so on caused a great deal of disruption to our economy. So our share of the world economy dropped to about 24.5%. By this time, China's economy had popped up to 25%. So China became the world's largest economy and bypassed India about 500 years ago. At this time, Europe was going through the Renaissance. So it went through a big shift in its share of the world economy. And it was about 18% of the world economy around about the year 1500. Still smaller than us, still smaller than China, but clearly sharp increase. So this is the time, remember, that the Europeans were exploring the world. They had discovered the new, the Americas and so on. Vasco da Gama had already found his way to India. Now, over the next few centuries, Europe's share dramatically went up. So by 1820, when the Industrial Revolution was taking off, Western Europe's share had gone up to 24% of the world economy. But let me tell you, even at this stage, China was a world leader. So in the year 1820, China's share of the world economy was 33%. And India's share by this point, because remember, we had already been colonized by this point for some time, had gone down by this point to 16%. Now, the 19th century was quite catastrophic for both India and China. So by 1913, i.e. just before the First World War was about to happen, India's share had dropped further to just 7.6%. So India's share a century earlier was about 16%. By 1913, it was less than half at 7.8%. But something even more catastrophic happened to China. It had gone from 33% to just 9%. So it was slightly bigger than India's economy, but it was a really catastrophic drop. So although we Indians tend to focus on what happened to us in the 19th century, the famines, the colonization, and so on, but the Opium Wars, the various revolutions was absolutely catastrophic for China. And meanwhile, Europe's share jumped up to being a third of the world economy. So this was the peak of European domination over the world, when just before the First World War, Europe accounted for a third of the world's economy. From here, things changed dramatically. America took off, and by 1950, by which time both India and China had become new republics, Europe's share had dropped to 26%. However, by this time, both India and China had been really squeezed out. China's share, by the time 1950 came around, was just 4.5%. And we had become independent, and our share had gone down to 4.2%. So you can see how catastrophic this decline was. However, if you thought becoming free was a good thing, let me tell you, policies that both these countries adopted after becoming independent, free countries was just as catastrophic. So, by 1980, and here I am now shifting from Angus Madison's estimates to IMF estimates, because they are a little more accurate. They're not exactly the same, but they are still PPP IMF estimates. So in 1980, China's share had gone down to just 2.3% of the world economy. It had gone through the Cultural Revolution, the Great Leap Forward, and they had been catastrophic. So this is about the time that it began to reform its economy from 1978 onwards. Its share of the world economy had gone down to just 2.3%. And Nehruvian socialism had taken us down to 3%. So we had fared a little bit better. So Nehru's policies were a little bit better than Mao's. So we had gone down to 3%. China was down to 2.3%. So I'm just pointing out to you how catastrophic this decline was with colonization, but just pointing out to you that bad policies, even if you're a free country, can also be pretty catastrophic. Now, from the 80s onward, some tentative reforms began to happen in India. China took it a little more seriously. And by 1991, when we began to open up our economy, China's share had already gone up to 4%. Ours had drifted up a little bit to about 3.5% through the 80s. Remember, the 80s had seen some reforms. We had let in Maruti, for example. Many of you in the audience will remember the Maruti 800. By 2000, China had taken off. So by 2000, China's share of the world economy was already at 7.2%. We had improved a little bit, and it had gone up to 4.3%. And today, in 2024, China is 19.5% of the world economy. Still not to where it was in 1820, but now in PPP terms, already the world's largest economy. Okay? India, too, has done reasonably well. Not as well as China, but we are now accounting in 2024 for 8% of the world's economy. Okay? Now, just let me tell you, this 8% just brings us back to where we were 100 years ago, just before the First World War. So we have just about, over the course of a century, clawed back. So the course of a century, we went back through the last 30, 40 years of colonization, and then 40 years of socialism, and then 30 years of reforms. That cycle has just brought us back to where we were in terms of our share in world economy, to where we were just before the First World War. So we are here at a threshold of something. We are not there yet. This is an opportunity, because at least the IMF's estimates, and this roughly is my own judgment, that China's share in the world economy will now plateau out at about 19% odd. Our share will be now beginning to grow. By 2027 or thereabouts, we will be the single largest contributor of world growth unless something goes badly wrong. And so by 2030, we should be at about a little over 9% of the world economy. And from there, as you know, compounding is one of the most powerful tools in the world. We will begin to claw back more and more of our true place in the world economy. Now, what is our true place in the world economy? Well, we happen to be 1/6 of the world population. So, our true share of the world economy should be about 1/6. That is what we should minimally aspire for over the next 20, 25 years. So, ladies and gentlemen, it's going to be a journey where we hope to dramatically improve the quality of lives for something where we will peak at slightly short of 1.6 billion people in 20, 25 years' time. And hopefully by that time, we will have solved for extreme poverty. Well before that, hopefully. We will have clawed back our place in the world. And that by that time, by the way, we will also be the world's largest economy. That is the aim when we are, in 2047, celebrating 100 years of being a free country. Thank you, ladies and gentlemen.
Thank you so much for that very enlightening session and talking about our true place and our true share in the world economy, and of course our dream of being one of the largest economies. Very well spoken, sir. Thank you so much. Moving on, ladies and gentlemen, well, talking about India's landscape of wealth management, which is undergoing a metamorphosis, driven by an interplay of technological advancements, shifting demographics, as I mentioned before, and evolving client expectations. So gone are the days of traditional wealth management paradigms and practices. Instead, we find ourselves today at the forefront of a revolution where innovation and adaptability and agility are the keys to success. Now, in the upcoming panel discussion titled The Changing Face of Wealth Management and Its Gateway to Success, we will deep dive into the heart of this transformation. From the rise of digital platforms to the emergence of new age wealth management professionals and models, our esteemed panelists will illuminate the shifting contours of India's wealth management landscape and also explore some of the strategies and insights essential for navigating this evolving and changing terrain. So without further ado, let's ignite this conversation. But first off, may I invite the moderator of the session on stage, CNBC TV18's senior editor, Surabhi Upadhyay. Surabhi is right here. And joining her on her panel, our esteemed guests, Ashish Taneja, founding partner, GrowX Ventures, and Richa Tripathi, Head Wealth Management Products at DBS Treasures. Welcome.
Good evening, Delhi, and good evening, ladies and gentlemen. Always great to be in the city for me. For me, it's home city, so when it's work combined with coming back home, it could never get better, right? Really appreciate all of you being here this evening and taking out the time to join us in these really important and very, very interesting conversations. We, of course, had our first chapter in Mumbai. Rich and I were in conversation there as well, and we're glad to be here with you in Delhi today. Ashish, welcome to the conversation as well. So the topic at hand that we have is, is a very interesting one, the changing face of wealth management in India and its gateway to success. The definition and the paradigm of wealth and the wealth effect is changing for sure. We see that around us, and we're seeing that across strata, from the mass affluent going up to the HNI to the ultra HNI. I think it's pretty established that India indeed has emerged as a huge land of opportunity when it comes to wealth creation. So I want to kickstart by getting your thoughts, both of you, on where we stand right now. The economic landscape and what that means in terms of just the wealth opportunity. Richa?
Yeah, so thanks Surbi, and thanks CNBC for pulling this off. The Mumbai chapter was outstanding, and we heard some great speakers, and I'm hoping that today we'll also get to hear a lot of good stuff. Having said that, we've heard Sanjeev, so I don't have to really repeat in terms of the growth opportunity that India has, and really, by 20, by this year, this century, we should be able to see that we are becoming the world's, best, in terms of GDP growth economy. Having said that, we are not really too far from being at least a third in near future. In 5 to 10 years is what I see. Next 10 years, it's definitely going to be a golden period for Indian growth and Indian opportunity. As far as wealth is concerned, I'll just give some statistics, right? We heard Prashant saying that, markets are all-time high. In terms of the wealth affluent segment, it's growing at the rate of 15 to 18% with that CAGR, and we expect that to continue over the next 5 to 10 years. As far as billionaires are concerned, there was this recent report by Knight Frank which said that Mumbai has actually surpassed Beijing in terms of number of billionaires that we have in the country. So of course the wealth is growing in country, and there is this shift from affluent to ultra HNIs, HNIs and ultra HNIs, which we are seeing, and the number is kind of compounding as we speak, right? So there's enough and more for all of us, and all of us related to this industry to gain the market share as far as wealth is concerned. So that's what is a very positive story, and that we all have to kind of get our maximum share out of it. Yeah.
Absolutely. Ashish, your perspective, because at GrowX, you guys are investing in a lot of companies that could be leading to a huge amount of wealth as well. So your perspective on this?
Well, so, I'll skip the macros, but, I'll share a piece. I run a venture capital firm. We're always raising capital. And, over the last decade, I've seen a, step change in approach of foreign investors, individual investors, right? There was a time when, you go and pitch to investors, and, the message was, I am not doing India again, INDIA. That means they had invested in the country, they'd burned their fingers, no returns came out, right? Today, the situation where we're sitting in, India is not a question anymore. What people want to do is, where do I start? Where do I invest? Who are the right fund managers? So that's a huge shift, right? We no longer, a plan C or a plan D or a plan E. For a lot of the large institutional funds, we're sitting as your top priority, from them to kind of allocate capital around that, yeah? So that's one big perspective. My business, what I do is, and I hope, we'll be able to, folks like us will be able to do more, is essentially to back entrepreneurs. a lot of these entrepreneurs are the future billionaires, yeah? And through those billionaires, a lot of millionaires will get created. And, that's our North Star. If we're able to find the right talent to back, put in our small capital behind them, get some great ideas being shaped out of the country. And through that, if a lot of wealth gets unlocked and gets distributed, through consumption in the country, nothing like it. So that's the big part. Yeah.
So the funding winter is over? Is it spring? Is it summer? Or where are we?
I don't know. Personally, I stay away from macros. So, yes, there are talks about trillions of dollars will get added to our GDP, but it does not matter. In a down market, in a good market, the job for us and job for any other wealth manager is to find the right opportunity. It's a needle in the haystack sort of a story, and there are always rock stars out there who are building something good. A lot of people have said that in down markets, great businesses get built, right? So, there's an opportunity. In India, honestly, the winter which we're talking about, it wasn't that harsh, right? It wasn't that harsh. Yes, the sentiment changes, people are slightly more cautious, but good founders are raising capital. A lot is going behind public markets and so on and so forth, right? So it wasn't that harsh. I don't know if it's winter, spring, summer, whatever it is, but these are good times.
Okay. That's good to know. Richa, so from, the HNI and ultra HNI perspective, which is obviously sort of a big target area for DBS Treasures, how do you look at alternates and basically private markets, and how do you handhold investors into venturing into that space in the right way?
Yeah, so Ruby, before I get into that, let me just give you a bit of a perspective of our DBS heritage, right? We, as Prashant mentioned in the earlier part, that we've been in the country for the last 30 years, and we were the first bank, one of the first banks to introduce like completely digital account opening journey, right, which we call as DG Bank. We were the first few. From there, like if you look at it, we've been kind of investing a lot on our technology platforms. We talk about DG platform, DG portfolio, which is a curated basket of mutual funds. Basis the client's credit risk, clients can actually go and invest in that, which is backed by CRISIL and Morningstar rated funds. So there is a lot of innovation backed by technology and platform, which is going at the back of what we do in terms of wealth management and helping our clients to invest better. As far as, and we cater to across the whole segment or whole spectrum of customers, right? So right from retail to mass affluent to HNI, ultra HNI, family offices, it completely kind of, we cover the whole spectrum. From a simple need of SIP investments to family offices to HNIs, ultra HNIs, PMS, alternates, and everything is what we capture. There is an element of and I won't say really a phygital or, digital, all those words. But having said that, when we look at the ultra HNI space, relationship management becomes very critical, right? What is the customer really looking for? A customer is looking for, clearly three things which come to my mind. One is convenience. Right? What convenience are we giving to our customers, whether it's given by the physical RM covering the customer or the digital platform. Second is in terms of transparency, and that's where the trust element comes into play. How transparent are we as a bank or as a service provider? We provide all information to our clients, whether it is the market's insights or the portfolio that the clients have invested in. It's doing good, bad, what are the terms and conditions, exit, entry loads. There are a lot of things that, as a relationship manager, as a wealth, service provider, we need to be sure of, and we need to be very transparent about. And that brings in this whole element of trust, right? So coming back to your question now, that what are the ways that, we handle? We are a distributor, right? We have a distribution license. What we do is, through our very rigorous due diligence process, we onboard funds, we onboard AMCs, and we look at the credibility of the AMCs, credibility of the fund houses, credibility of the fund manager, before we even go and talk about and refer it to our clients for them to decide where they want to invest. So that's what is our strategy around addressing or catering to the high net worth individuals. Yeah.
Absolutely, and transparency and having that aspect of credibility, I guess, is right up there in terms of key requirements that a client would have. I want to spend some time talking about now technology, both in terms of what that's doing to the wealth management landscape and technology as an investment opportunity, where your input, Ashish, should be really welcome. So let's discuss the latter first, because AI is the buzzword. Everybody, including, I think, my 10-year-old niece, knows how much money people are making on the NVIDIA stock. And I mean, across the spectrum, I'm sure, whether it's mass affluent, going right up to family office level, everybody wants a piece of the pie. What's your advice to people, and what kind of investors are you seeing coming in to your funds?
All kind of investors, all kind of investors. We've got family offices, we've got individual investors, we've got institutional investors, we've got young entrepreneurs, all kind of investors, right? And we're a very small fund, which essentially means we're kind of dealing with 50, 80, 100 investors at a point of time, right? So yes, we open up to a few hundred, but it's not the full market, right? But throughout, if you kind of analyze this, these are people who are well-read, they understand as to how technology is going to shift the world, and they use the new IP, innovative stuff day in and day out in their work or personal lives and so on and so forth. So they're exposed to that. There's another category who wants to participate in new IP coming out of this country, right? If you kind of look back our landscape, right? I mean, we started seeing success when the IT services, likes of Infosys, Wipro, TCS kind of came into being, right? But, the hundreds of thousands of people who work with these large IT services companies, they've opened up the next level of entrepreneurship, right? These are hardcore engineers, seriously talented people who've kind of delivered these products for large companies in the past. Now they're going to go back and are saying, we're going to do it for ourselves, right? In India today, in our portfolio, we've got a young team, actually two, in space technology, right? One of them is building a constellation of nanosatellites, yeah? The other one is building propulsion engines for in-orbit navigation, yeah? We got a team solving for data communication using light. We've got a team giving vision to robotics, right? And these are the kind of qualities of ideas which are coming up, and entrepreneurs are chasing those dreams. So a lot of the HNIs want to participate in these growth journeys and say that I own a piece of the next Tesla or a SpaceX.
And just to add to what Ashish mentioned, in addition to what's happening outside in the whole, as a country, that there's a lot of tectonic shift towards technology that we have seen in the last 10 years. From the bank point of view, internally, the way we use and leverage technology in terms of helping our clients to take right decisions, right? So it's backed by a lot of data analytics. We pretty much have models where we call it AI ML model, which is, artificial intelligence, machine learning kind of models, where we generate nudges which are sent to customers. If I give you a number, around 16 million nudges is what, regularly per year we kind of sent it to our clients.
And these are nudges which sort of nudge you to take some sort of an action.
Yes. So nudges would be, for example, there would be a nudge that now you're the markets are all-time high, good time for you to invest, and the basis for that nudge would be that, we would know that there is a deposit or some investment which is going to come up for maturity, right? So that's what, it's the right time, giving a nudge to customers for them to decide, or relationship managers, for them to have a conversation with their customers to decide on at the right time to enter or exit market. So these are the things that, from a bank's perspective, we use technology pretty in a very robust way to enable the front line to be able to have that conversation with their clients, and enable clients as well to take right decisions. Yeah.
Sure. So just another question on technology, and I think this is something that we deal with a lot of time. And the thing with tech investing is that it's so exciting that it's bound to go absolutely at stratospheric levels, and it's bound to go through its bust cycles as well. We've seen that in the early 90s, etc. Then we saw that with consumer tech. A lot of the consumer tech companies that listed, and then the whole path to profitability debate. So question to both of you, different aspects. Your advice, Ashish, to investors on this new wave, which is AI, space technology, semiconductors, etc. what would you tell investors? How can we avoid getting our fingers burnt? And Richard, and I want your perspective as a wealth manager who's helping family offices or ultra HNIs, because it's the jazz is, you cannot escape it. But how do you still be cautious? So Ashish, you go first.
I'm going to say probably two things. Surabhi spoke about, and we're talking about AI. AI is a buzzword today. Yeah, but when tech reaches a stage where all of us are talking about it, that's a time not to invest. Yeah. So you got to work with managers, therefore, who kind of done this before, who got access to cutting edge technology, who burn their fingers and kind of learn the art in terms of how do you spot the next big trend or the next opportunity, and work with them, right? The related point within that is, a lot of family offices and individuals believe they have access to deal flow, and therefore, they want to work directly with startups, and they say, I want to be in the cap table directly. And I think that's fundamentally, there's a problem there, because if you're getting those access to those deals, those are not the best deals, right? So, work with high quality managers, take your time to find and build a relationship with that lot, and work with your advisors to make sure you have the right people and stay away from the fear of missing out. There's always the next big thing, so the FOMO will not take you anywhere. Yeah.
Okay, so don't let FOMO take over all your decisions. Richard, as a wealth manager, when you talk to your team, and these are ideas that most clients probably want some knowledge about, and maybe a piece of the action as well. How do you sort of handle this? So
look, Surabhi, we are a bank, and as a bank, it's not just about the investment. Investment is one part of it, right? Investing into mutual funds or AIFs and PMS is one part of it that is a part of our bouquet of products that we offer to our customers for them to decide, right? There is like this whole banking, kind of holistic, we call it holistic banking and wealth solutions services that we provide. Having said that, being Asia's safest bank, and we are conservative, and we let the clients decide, and we provide all information and data points to our clients to decide what's the right asset allocation for them or a portfolio mix that they should be, going for. But personally, for my own wealth, I stay invested and I'm very conservative.
Okay, fair enough. Coming down to some final thoughts, we're in an election year, and the markets are vibrant, the economy is vibrant. From a regulatory perspective, when it comes to wealth management and digital technology, are there any changes that you would like to see in the landscape, regulatory or government in any way?
Yeah, so over the last couple of years, we've seen that as far as wealth, industry is concerned, regulators have kind of, come up with a lot of changes. And wealth, whether it is from a, regulator's point of view, SEBI point of view, even on insurance side, we've seen that there are a couple of changes. IIDA has come up with a lot of changes. So it is an evolving, phase, and it's a journey. It's a journey that all of us are kind of, looking at the changes and then kind of pivoting ourselves to see that how do we go and, be the right partner, wealth partner to our customers. So yes, I mean, there is something which will keep happening, and we anticipate that there will be further some changes that we see. In fact, like on a sustainable financing side, on ESG side, we expect that there might be some changes to the way fund managers and selection process should happen. But let's see. I mean, I can't really comment more than that.
Fair enough. We'll watch the space. Ashish?
No, I think a couple of things. First, SEBI, they've been very proactive, especially around wealth management, to distinguish distribution businesses and advisory businesses. Yeah. And I think over the next few years, we will see rise of advisory businesses, right? A lot of the HNIs, UHNIs, family offices would want someone insider, someone as an advisor, a close aid to help them navigate through what the decision making is. And at the regulatory level, they need to keep an eye on making sure that the two parts, advisory and distribution, do not mix. If they kind of kept independent, that's how we'll see the benefit around that. The second piece is, I don't have an answer for that, but if you kind of look through and talk to a lot of the family offices are not being set up in India. They're going to Singapore, they're going to Dubai. That means there's a gap, right? So that means there's a gap. And the regulator needs to figure out a way to make sure you retain the capital in India, because to fuel the next level of innovation, you want domestic capital, right? That's the second part. And the third thing is, which could be probably related in terms of how do you retain capital in the country, is to put incentives. You know, even you go to developed markets, right? You know, UK is a great point. To angel investors, there are tax incentives. To family offices, there are reasons to kind of back high on IP sort of an initiatives. I think, you know, that's a change one would like that. And that change could be directed towards maybe climate, to ESG benefits and stuff like that. Yeah? So there are a bunch of things. I've got a longer list, but maybe another day.
Taxes, let's not even go there because I do track that in my day job. And just yesterday, we were having a debate on the channel on inheritance tax and certain very interesting points Mr. Mohandas Pai was making about driving entrepreneurs away. So, well, let's hold our breath and let's just hope that doesn't happen. But on angel tax, which was the big headline of 2023-24, has that settled now?
No, I think that's settled. But I think the principles behind that angel tax was very simply to see that are people cleaning up their money. So, you know, the idea for a SEBI or a regulator was to make sure that every rupee behind a company, you know, was clean money, tax-paid money and stuff like that. And the reason to do that, from my perspective, is, you know, there are 100 startups out there, 90 are bound to fail, which essentially means you kind of capitalize some of the entities and, you know, there's no track in terms of where the money went, right? So, you know, but as an institutional investor, you know, we don't face that problem because, you know, you've onboarded your investors doing proper KYC, you know, follow the regulatory norms and all the compliance checks and balances, and, you know, the regulator is not bothered about that. It's the other part, yeah.
It's an evolving landscape, but I guess a very promising one at that as well. Thank you both very much. This was a very enlightening conversation, and I hope the audience enjoyed it as well. Thank you.
Thank you.
Thank you very much.
A great conversation indeed. Thank you to our panelists. Thank you, Surabhi. Before we move on, I have a few announcements to make. Actually, just one announcement, which is about the presence of DBS Treasurers wealth managers right outside in the pre-function area. And if you have any queries, any questions, or if you want to brainstorm with them, they're right outside there for you. All right, ladies and gentlemen, we now move on and we talk about Singapore. Yes, we spoke about the nuances of wealth management in India's dynamic landscape just a few minutes back, but what we are now going to look at is the Singapore experience. Insights from Singapore. Dynamic wealth management mantras from Singapore. So we move on and we talk about our next subject, which is reimagining the future of wealth management in our context. Singapore, renowned for its cutting-edge financial ecosystem and forward-thinking regulatory framework, serves as an inspirational hub for wealth management excellence. In the upcoming panel, what we are going to explore is insights on the title, New Age Wealth Management Approach with Inspirations from Singapore, and we bring together a distinguished group of experts who will share their personal experiences, perspectives, and also what are the inspirations they derive from Singapore's wealth management practices. So from leveraging fintech solutions to embracing a client-centric approach, our panelists will talk about the principles and strategies that can drive transformative change in our own wealth management world. So without further ado, let me take this opportunity to invite on stage the moderator of the session, CNBC TV18's Ritu Singh. If I can have her here, right there. And please put your hands together as I invite our panelists on stage. Sarvajit Vark, co-founder and MD, Finvasia. Vishal Rakyan, founding member and business head, HNI Angel One Wealth. Dr. Ritesh Malik, angel investor and founder, Innovate. And Kingsley Ko, executive director, regional head, investment, products and advisory, DBS Bank. Over to you.
Thanks, Mugdha, for that introduction. Well, I am, of course, going to get the Singapore angle. We have someone from DBS Bank Singapore right here. But largely, what we'd like to touch upon is the evolution of the wealth management industry in what is a digital-first world. I mean, we are living in a digital-first world. Perhaps 10 years ago, that wouldn't be a true statement. But, you know, technology's touched every aspect of our lives. Wealth management is no different. And I have an esteemed panel, I think quite, varied experiences here to bring out some of the nuances in that. So let me start with you, Vishal. As a young company, as a digital-first company in the wealth management space, just start by setting a context as to how big the opportunity now is thanks to the advent of digital. When we talk about a new Ultra HNI getting created in India and every 3 days, that's a staggering figure. But how has technology aided in the expansion of the industry?
Okay, so couple of things. The reason we all got together and started and building this platform is because there are few trends which are happening today. One is the rise of the tier 2 and tier 3 cities for wealth. So how do you kind of reach out to them and create an efficient distribution model? You need technology to leverage that. Second thing that's happening is clients are increasingly, clients have historically invested across 2-3 different platforms, but they have a problem of consolidating that data and getting insights from that data, right? That is something that can be today solved completely technologically, where earlier it used to be very manual interface driven, right? So you can today actually get your entire portfolio consolidated at a click of a button, and insights from that using AI can be generated right there on the spot, right? Another thing where I think technology is going to be playing a very, very big part is in the relationship management side, making it hyper-personalized. So today, using language learning models, you can create sort of a hyper-personalized engagement for every client. You don't have to send en masse messages to clients, right? Like I think even DBS was saying, they've created nudges, right? You can create very intelligent nudges which are very client-centric. So today we can actually study client behavior over his journey of investing and build products accordingly for the client, right? Which could have not been done earlier, right? Using machine learning, we can actually see the client's entire investment journey if they let us and if they give us permission. And from that, give them insights about their own behavior at various market cycles. And then curate products accordingly. So, those are some of the things that we find exciting.
Sarojit, has your experience been similar?
Thank you very much. I'll simply say that, the definition of wealth is actually going to change drastically in the next few years. And when I say that, I will probably get on to a point saying that if you really break it down to the ABC, it's more on the accessibility. I know a lot of people will say AI. It is part of the accessibility. And B is taking the biasness out of the system. And third, we are moving to a more customized world. I mean, we are gone with the ecosystem where it used to be like a one problem, one app solution. We are giving them, say, one kind of asset classes. Now, everybody wants access to their entire ecosystem, their entire wealth within the single application. I mean, the whole definition is what I was referring to, is the basics of the wealth creation, the basics of having access to the wealth, and even to do better with the money. Ultimately, we spend so much time, say 18 hours in a day. Out of that, we work so hard, and we are very sensitive to money. And when you do that, you tend to be very cautious of where your money goes. And more importantly, how can you do better with your money? I mean, the whole ecosystem is built up where the wealth creation, wealth maintenance, transfer of wealth on succession, all that is going to change in the next few years. And part of it is going to be technology, but part of it is because the demographics of India is now expecting more. And that will create the more futuristic driven technologies. And most of the fintechs, if you talk about it, knows that the bridge has to be by creating more customized, more my problem, my app, instead of one problem solution. And that's where I think the wealth is moving.
Well, lots of interesting points between the two of you, and I'll get to some of the nitty-gritties of that. But Ritesh, let me quickly get in your comments as well. I don't know if you all know, Ritesh is a doctor turned entrepreneur turned investor. So let me ask you to don that investor hat for a moment and give us a sense of where you see the intersection of angel investment and wealth management. I mean, in the previous panel, we were hearing about HNI's approach to sort of angel investment. Just give us a sense of, how technology has shaped some of the trends that you're seeing there.
Sure. First of all, I'm very underdressed. I'm extremely sorry. Typical young entrepreneur, but yes, first of all, thank you very much.
Have to carry the look of fintech entrepreneur, of course.
So interestingly, I've realized this, and Ashish would back this, as a founder, what it takes to generate wealth is opposite of what it takes to preserve wealth. And I've burnt my fingers over there. And I think angel investing as an asset class is getting bigger and bigger. When I started angel investing, this was 2013, when I was in my final year. I was working at Gangaram Hospital. I think there were hardly 10 to 15 angel investors. And today we have 2,800 people who mention angel investor in their LinkedIn profile. So I think as an industry it's growing, in my opinion, I tell everyone, have at least 2% of your wealth parked in startups. I genuinely believe the next wave of technological products will come from Bharat. They will not only solve challenges of Bharat, but will be built for the world. I truly believe that there will be, we have so many challenges, and the kind of R&D which will happen, and these are phases. Like in America, we saw it took them 50 years to where they are today. But India has leapfrogged. We have 83.5 crore people online. We're the largest digital democracy and open internet ecosystem. I think I'm very bullish on angel investing. And lastly, on investing, I think never ever, your first check should never be yourself. Use either as a family office, always invest in a fund. It's very easy to invest, and angel investing is very hard. You will 99% you'll never get your money back if you invest yourself. So I think go with a fund, go with GrowX, go with any fund that you like, but go with a fund, and then learn and start small. I know a family office. They invested 50 crore rupees, 2015, in 5 startups. All 5 tanked. Do not do those kind of adventure, or it's actually risky.
Well, you're confusing us. You're very bullish in the startup ecosystem. You're telling us at least 2% of your wealth should be in the startup space, and then you're giving us an example of a family that lost all their money.
Don't do it directly. When you start small.
Managers.
And also start small. A lot of people just with the entire hype by media, they just think that we're going to invest and we are going to just make a 10x return. That does not happen most of the times.
Well, I'll hold my comments on the media, but Keng, just quickly, is that something you hear from your clients as well? Are they very bullish about investing in the startup ecosystem? And generally at DBS, coming from Singapore, give us your, your own experience there, what the trends that you're seeing in the digital space, the investment themes that are playing out, just your first thoughts to kick things off.
Right. So, hi everyone, good evening. So first of all, it's great to be back in Delhi. I was last here 10 years ago. A lot has changed. But I think one thing remains the same, and that is Indians' love for investment and wealth management. And that I know because I watched CNBC in my hotel room. And it was full of stock tips and what's happening with the Nifty. And I guess I'm coming at a good time because the stock market is at an all-time high. So to your question about what do Singaporeans invest in, I think there's still a lot of interest in the public markets, especially with what's happened over the last 12 months. So people were a little spooked after 2022 when markets corrected, but since then markets have rallied, even in the US, in Japan, in India. Hong Kong, China's a bit down, but that's recovering. So a lot of people are still investing in the public markets, but we're starting to see more interest in private funds, private equity, private debt, especially in the ultra-high net worth space. So that's something that we're promoting. I think the title of today's event really is about inspirations from Singapore. So I thought maybe I could just talk a bit about that, right?
Sure.
So yeah, since I'm from Singapore, and that's kind of something that is what people are interested in. So I think what's really happening in Singapore is that over the last few years, and particularly after COVID, Singapore has really risen in stature as a financial hub. And a lot of millionaires and billionaires have moved their assets into Singapore. And that's why we've also seen an increase in family offices, of which DBS Singapore is managing a large part of it. We think that that trend is set to continue. Trust, as mentioned many times in the past, that is a very important component of what we offer in DBS Singapore. And I think one point that I actually haven't heard in the last few presentations was diversification, which is very important. Because when markets are rallying, it's easy to get caught up, especially in the technology stocks, in the cryptocurrencies, because the more you make, the more you want to buy the same stock. You want to buy the NVIDIA, you want to buy the Tesla, you want to buy the Bitcoin. But when markets correct, they correct in a very, very severe way. So it's very important that we have diversification, portfolio diversification, and which is what we do across the wealth continuum in DBS, which is to engage clients on their portfolio needs, find out what exactly are they looking for, what is their risk tolerance, and make sure that they're invested across stocks, bonds, fixed income, private assets, so that they're not narrowly focused. I think that's one very important tenet in wealth management.
Okay, diversification is the key to investments, and that's something that you as wealth management, in Singapore would be advocating. But if you were to look and compare the India market with where Singapore is at right now, what emerges as the key differences and areas where India could learn perhaps from what you've done at Singapore?
Right, so I actually cover the entire region in Singapore. So I do see beyond just Singapore and India. I also see Hong Kong, China, Indonesia, Thailand. So it's really quite interesting because in the smaller markets, we do see a lot more international assets on top of the home market. But in the larger economies like India and China, we see a lot of bias towards domestic assets. Because of the regulatory restrictions in India, banks can only offer a very limited range of products. So right now, unit trust and AIF and what have you. So I think, with the deregulation that I hear that's coming, hopefully there can be more development and more innovation in product development. There's also all the developments in Gift City as well that would serve also to be a location where product innovation can take place.
All right, I'm going to zoom in from the global, experience to the very micro experience. And, Vishal, you started by talking about how, thanks to technology, you're not just catering to the tier 1, to the metros and people, individuals there. Just give us in terms of data, for instance, your new set of customers, where you're seeing this industry sort of grow in tier 2, beyond tier 3 and 4, where you're seeing more demand, and if digital really has helped you expand that target client base, to what extent?
So giving you some data points. So for example, if you look at the Indian mutual fund industry, it's classified as T30 and then B30. T30 is the top 30 and B30 is beyond the top 30. In the last 2 years, the market share of the B30 has actually gone up by 2%. And these are last 2 years with the dramatic inflows in mutual funds. And that has come through fintech players. Today, the top 3 fintech players in the country manage 46% of active client user base in the stock market, right? And these 3 players actually run only digital models. They don't even run omni-channels like what we are building in wealth, right? So that is a big thing. Another thing, if you just look at data, right, today, like you mentioned, and I think IPS, I'm just addressing his point, creating an investment policy statement is very, very important. Traditionally, it's only done by wealth managers when they go and visit clients. So that access is only given to the ultra HNIs, right? Using technology, you can democratize that. You can provide that access to HNIs, affluent clients, and everybody can have their investment policy statement, which tells them, basis their risk, return, and time horizon, what is the asset classes they should be in and how much. And they can even control it and monitor it digitally. So that nobody is, most of the people, like somebody used the word FOMO, somebody, most of the people buy because there's something in the news, and they don't realize how that's impacting their overall portfolio. Right? Like you mentioned very clearly that you should have 2%. So somebody should help people define, and that's when the experience with investing will get good. And you can use that through technology, you can do that, and you can create it for the HNIs, the emerging HNIs, and not only restricted to the ultra HNIs. Right? So I think that is where a big role, and today India has 760 million internet users. 500 million of them actually are non-English internet users, which means you can create vernacular investments using technology, which is very difficult to do if you... So my first job ever was in a startup in Bombay, and we used to cater to a lot of regional players. So we have to hire people who spoke regional languages to cater to regional markets. Technology can help you solve that problem. So, a lot of things that technology will solve over the next coming few years.
Sarvajit, would you be able to help us with where you're seeing these emerging hotspots of opportunities for you outside of the Delhis and Mumbais and Bangalores of the world?
Sure. I think coming from a fintech mindset, I strongly say a line that once data talks to data, we all will get to know what we don't know. And that's where, the whole shift will ultimately move into, right? I mean, it's not going to be far, and obviously one of our disruption products which we are working on right now is that, can you really talk to your data? Can you really ask a question about your financial health? Can you understand what your actual bank statement says? Can you, and again, when you're talking about that, that next level of accessibility, I think the AI and LLM models can really create those vernacular languages where people say, "Mujhe mere finance ke baare mein batao." I'm sorry, I'm just, for some people who can't get it, I'm saying that, please tell me more about my finances, right? I mean, if this is how the simple accessibility can be given to tier 2, tier 3 city, think about how the wealth will multiply over years, right? And this is where I believe that most of the shift, including ourselves, is more looking at tier 2, tier 3 cities where people have wealth. I mean, we have seen the work from home culture. We have seen how massive infra real estate has been building up in tier 2, 3 cities because people really need those, those accessibilities, those comforts. And that will again come from when you have a wealth, how do you multiply it? How do you better? And these technology tools, I strongly believe that will give that power to the users where they will simply go and ask a generative AI in their local language, they're saying, help me. And trust me, they're going to be answers on their own wealth, on their own personal finances, and that will make them do better.
You said there's power in the hands of users, right? And thanks to people like you that are building platforms that are so easy to use, then my question to you is, how do you differentiate as a business? If it's that easy for me to download and use an app, switch from one platform to another where maybe I have to pay a lower fees, for instance, how do you differentiate yourself? And is customer loyalty becoming a challenge for the industry?
So I think it's not about cost anymore. Let me be very honest to you. And it's for everybody. Ultimately, it's a value. Now, how do you define a value, right? I mean, for someone who is earning, say, 1 lakh rupee a month, their aspirations, their vision to do certain things are going to be very different, right? I mean, and similarly, once you start moving to a high segment HNIs, ultra HNIs, they have built those assets over a period of time, and they have gone through a lot of circles. Now, how typically it happens is, from a technology standpoint, it's very easy to say we can copy you. Trust me, it's not that easy, right? I mean, if that would have been a case, everybody would just copy. I mean, those were the days we could just pick up an idea from a US and saying, white label it, give it back to the Indian clients, everybody will be happy. It doesn't work that way. I mean, the value proposition will again come from the customization. The whole ABC where I started, when you start giving what the actual user wants and they get it, trust me, they don't want to go anywhere else.
Well, I keep hearing the words customization, personalization, hyper-personalization. What for you at DBS, for instance, what has been your own sort of experience? We're talking about this use of digital hyper-personalization. When you're looking to scale these solutions, does that become a challenge at some level?
No, actually, I think it becomes simpler because with technology, you're actually able to personalize even more easily. In the past, for example, for us to be able to create something that's bespoke for clients, they needed to have, say, $10 million for us to create a portfolio for the clients. But right now, even if you have as little as $1,000, we're able to create a portfolio for you by tapping on technology. And we use what we call robo-advisory in the bank, right? And which we've also launched in DBS India. So that started in Singapore, where we are able to, based on the market views, our house view, our CIO view, then create a portfolio of UTs, 6 to 8 unit trusts. And in the past, every single unit trust might require you to put 10,000 US dollars. But because of the power of technology and the ability for us to aggregate across clients, so now with as little in Singapore, as little as 1,000 US dollars, you're able to invest into a portfolio of diversified funds, from equity to bond to balance. So that, to me, in a sense, is also an example of personalization, because you are able to actually pick from a range of portfolio whatever suits you, which is not something that you could do in the past.
Well, I also want to touch upon the aspect of this digital versus physical, especially in a market like India, for instance. You know, there are various generations of users, there are various age groups of users. Not everybody may be as tech savvy as the other. How do you solve for that, Ritesh, for instance? I mean, can we envisage a future where wealth management could be completely digital? What is the ideal mix?
Sure. So I think the digital trust in India has leap forwarded. If you see earlier, at least 10 years back, people would not even transfer money to their accounts because they would say that wo paisa koi chura ke le jayega. So we are seeing a very, very interesting digital leap forwarding happening in our country. I'll tell you something very interesting. There's an app. When you talk about tier 2 cities, there are young children who are actually building their mock stock portfolios. Aspirations of India have changed drastically. We no longer want FD returns because of people like Ankur Wariko and all the influencers of the country. We've started to understand. And the challenge is our education system has never taught us personal finance. And for the first time, because of YouTube, we are actually learning what is compounding. We are actually learning what is inflation. We are actually earning how do you not make money doing an FD? So I think this digital trust is actually helping. So I'm 34 right now, and I got money when I was 29. And I genuinely did not know what to do with the money. And I started talking to a lot of investment banking people. And I was actually, because the only thing that I knew was startups, so I said, okay, I'm going to invest majority of my capital in startups. And then someone told me that you don't do that. You have to actually have a very, as he rightly said, have a very diversified portfolio. So I think information and democracy is extremely important. I genuinely feel that platforms like what both of you are building are going to truly democratize. And when it comes to AI, we are actually contemplating of investing in a YC company that is building AI nudges. Someone just used the word nudge. Nudges are going to transform the world of wealth management. Example, I was just speaking to Ritesh, the other Ritesh from OYO, and this was 2020, and I just asked him where to invest capital. He said, the Nifty is at an all-time low, invest in the Nifty. I said, I'm very scared. He said, in all the collapses of stock markets in the world in the history, it has always rebounded to go higher. We are all paid to predict the future, all of us. All of us are paid. CNBC predicts the future like anything. You are continuously, and I use CNBC. No, of course. So see. Okay.
We let our guests do the talking.
Yeah. And the panelists as well. Yeah, so we are all, by the end of the day, most of the people in the room, the better you predict the future, the more wealthier you will become. So they are using AI to genuinely see history points in a particular stock and predict what is going to happen. And we have not even scratched the surface of AI in wealth management. We're going to see platforms that can predict how a stock will do with an accuracy of 96 to 97%.
Well, data is empowering, and it's good to hear that. But let me pose that question to you then. All of this data, all of this information, is it easy to disseminate to, or rather my question, I'll come back to what I did not get from Ritesh, was the physical versus digital aspect of it. Do you find it challenging perhaps to sort of use this tool with all age groups, with all segments of your clients, or how are you approaching it?
So our belief internally is that HNI and the ultra HNI segment, at least for the next 5-7 years, will be served through an omni-channel.
Yeah.
Where you are empowering your relationship managers, wealth managers with a lot of data and insights about their customers and about the markets and about the products. What currently is happening is where maybe a wealth manager has their own views which they share, which might not be necessarily the organization views. That will change. The views, the analysis, the data will be done through technology. The product curation will be done through technology. Relationship managers' main job would be to engage with clients, understand them better, and there also we will provide them a lot of nudges in terms of the behavior of the client from his past transactions, right? So those things we firmly believe will be an omni-channel. However, when you mentioned our parent company is a fully digital company.
Traditional.
It is a fully digital company, and the stat that's revealing is 70% of fintech wealth users are actually either millennials or Gen X.
Z,
so which basically means that going forward, digital is going to become the way. I mean, we believe it's going to be omni-channel for a while, but again, not trying to predict the future.
How long is that while? We don't predict, so we're going to ask you, how long is that while?
We don't see it happening for at least the next 5-7 years for sure.
All right, and again, like you said, I'm putting money in a digital channel, paisa kahan ja raha hai? That concern about, when you deal with digital, your Sarvjit, data privacy, data security, how are you able to bring that comfort to your clients that I'm using these tools, your data is secure? Give us some examples, real world examples.
So I think, fortunately, we are in India and we are very regulated. So let's take that as a compliment. And that's more important. How the whole digital transformation, financial inclusion, these words are becoming normal for us. And how that actually is happening, we can't even predict because tier 2, tier 3, tier 4 cities, they have become so used to with tech that asking them to stay away from mobile. I mean, my father does more shopping on, digital platforms than me. But that's the shift what we are talking about. I think within the regulated space, it becomes also important for the stakeholders, which are like us, So we are in fintech, but we are also, regulated by SEBI and RBI, which creates that ecosystem that as you are maturing, as you are building these products, your sense of responsibility is not just towards regulators, but also towards clients. Because people are trusting you, right? As I said, even if the custody remains with the bank, the experience, the transaction, the security is on the fintech applications. And this is where I believe that a lot of regulated compliances, lot of audits, lot of VPAT, PSI, I think these tech audits are creating a lot of confidence for companies like us, because then you can think of innovation, right? You don't have to go out and saying, I need to, convince a client that my mobile app is safe.
Yeah.
Because consciously it is, and being regulated, it also gives you comfort. So on the tech side,
within those guardrails.
Within those guardrails. But yes, as you tend to innovate, obviously people's expectations are going high.
Yeah.
Data is very critical and needs to be saved the most, right? I mean, it's more of you walking into a mall and think about there are CCTV cameras who have a cognitive behavioral AI tools at the back end, right?
Yeah.
So they know exactly when you're walking into a mall, which store you're going to go, what are you going to buy. That cognitive side of behavior analysis, again, is going to create more customized solutions where the privacy and security becomes more critical.
Well, it's refreshing to hear a fintech founder thanking the Reserve Bank of India for a change, for putting those guardrails into place, because it's often the other side. We hear that, the regulations are stifling innovation, but of course, it is to protect customers. Just quick final thoughts, King. How do you envisage the future of wealth management in this age of digitization, hyper-personalization, and the democratization of data, which is also raising up the client's expectations?
Actually, I don't think it'll be fully digital, right? Because I think we've gone through waves over the last 10 years. And every time when the market corrects, that's when you really need that human element and dimension to come in. I wouldn't say it's 100% human, but I wouldn't say it's 100% digital. So it's somewhere in between, right? Depending on which stage or which part of the wealth continuum you're at. So I think Richa mentioned earlier that we have this term that we use in DBS that we say phygital, right? Because that's kind of like our all-encompassing way to say that, look, it's not going to be either extreme. I think the future is bright. I think there's going to be a lot more innovation that's coming up, not just in robo-advisory, AI, ML, even, in new products and all. In Singapore recently, we even, ventured into blockchain and, started to put cryptocurrencies onto our digital platforms and all that, while at the same time also, ensuring that there are guardrails and that people get the information that they need. Because I think earlier on, there was that question about what about the data? And will clients get the data, the RMs get the data that they need? I think what people need right now is insights, not information. Because I don't think there is a shortage of information. Yeah, I think there is a glut, right? So the whole point is to turn that into insights, and the financial institution, the fintech that's able to do that, I think will be the one who wins the market share.
I think there's way too much data out there, but yes, insights is what you want, some deductions to make from that data. Ritesh, you have the final word. What are some of the emerging themes and technologies in this space that excite you most about how this wealth management ecosystem itself is shaping up?
I think when it comes to AI, I genuinely feel AI has not even scratched the surface when it comes to wealth management and cybersecurity. These are two trends I'm seeing. Example, there's one of the most famous platforms in the country today gets attacked by cyber crime almost every 3 hours. We need to ensure data. Unfortunately, in India, we do not care about data. At least majority of our country does not. And I think that is one of the largest opportunities that entrepreneurs have.
All right. On that note.
And one last piece. I completely agree with you. When it comes to, I don't think it'll ever go only digital. It'll always be phygital. As long as there is greed and fear in the markets, you will need a human trust to actually console, solace, and give you confidence when markets tank.
All right. On that note, unfortunately, we've run out of time, so hopefully we'll continue this conversation outside. But Vishal, Sarvajit, Ritesh, and King, thank you very much for candidly sharing your thoughts on the matter, and I hope it was an insightful conversation for everyone in the audience. Thank you very much for listening patiently. Thank you.
Thank you all for that very candid and insightful session. Now, to draw the Delhi chapter of the DBS Treasures Annual Wealth Summit to a close, I would like to invite on stage Bharat Mani, Managing Director and Head National Distribution, DBS Bank India, to deliver the vote of thanks.
Thanks a lot, Mugdha. And what a fascinating evening it has been over the last hour and a half. And I'm sure all of you in the room would agree that the debates that we heard today from the panel and the discussions which we had with the panel, and of course, starting off with the keynote address done by Mr. Sanjeev Sanyal, who took us through the ages of back into the, in a way back into the future, to borrow from the movie, where we saw India's role in the global economy from a peak coming down to a trough, and then hopefully in the next near future, we take the podium as one of the top 3 economies in the world. That was a fascinating insight. I need to thank Mr. Sanyal for being here with us, sharing his insights from a macro standpoint, also bringing in the world economy into view and our own country's pedestal. I'm sure each one of us will be proud of seeing India on the top of the pedestal. We then went on to a very interesting panel, where we had, in the first panel, my colleague Richa and Ashish, who gave us some very, very interesting insights into what we are seeing as an emerging trend on the wealth management space, specifically also bolstering what Mr. Sanyal said earlier, and specific to the India context. Wealth is here to stay. Growing wealth has always been part of human psyche, but then the acceptance of a broader variety of investors into new age technological innovations, catching it early, angel investing, to do or not to do angel investing always continues to be a debate. How to do it was partially touched on by the second panel, but I would like to thank Ashish and Richa for having shared their insights as a part of that discussion. And finally, the final panel took us through a range of discussions, right from fintech, non-fintech, phygital, not phygital, should we have RM, should we go digital, should we use AI, should we rely on AI, what is the future? I think, the debate continues, and we'll have to see how that pans on. But a very, very interesting facet of discussions which was taken up. And I sincerely want to thank Sarvajit, Vishal, Ritesh, Kengsui from our DBS team as we go along. But having said that, I also will be remiss if I don't point out that the reason that we wanted to bring this particular wealth management summit to you from DBS and co-powered by CNBC was to also point out that as we take away from all the panel discussions that we have, each one of us in this room and viewers watching this telecast would want to take insights on where should they invest, how should they invest, is phygital right, is digital right. I just wanted to point out that we from DBS attempt to address all these and go through and channelize all these queries and attempt to invest and ensure that as the world's best bank, rated by a few accredited institutions, and as Asia's safest bank over multiple years, we'll try and ensure that we advise, or rather ensure that we give you the right kind of insights, as rightly pointed out, in a world of over-information through our team of treasurers, relationship managers. We are phygital in India. We've got, as Prashant had said earlier, we are present in 350 cities with 525 branches. So you want to go digital, we have digital. You want to walk in and meet our people, we are phygital. And I want to ensure that I thank each and every one of you in this room, some of our ultra-high net worth customers present here for banking with us and reposing trust in us and seeing your wealth grow. And those of you who don't bank with us, I would urge you to bank with us and try us out as well to test out some of these hypotheses. Last but not the least, thank you. Thank you to Surabhi, Ritu, and Mugdha for having hosted this event, heralded these discussions, asking those questions which at times poked us and at times brought out the insights. And thanks, Hyatt Regency, for hosting this entire physical event out here. So thank you, everyone. And you've been a lovely audience. A huge amount of thanks to you, and a round of applause to all of you and our panelists as well. Thank you so much.
Bharat, wonderfully summarized there. Thank you so much. And on behalf of CNBC, I thank, of course, all our speakers, all our experts, and all of you for being such a wonderful audience. With that, ladies and gentlemen, we conclude DBS Treasure's Annual Wealth Summit, Delhi chapter, powered by CNBC TV18.com. And once again, a big thank you to our partners and sponsors, and of course, to all of you for being such a lovely audience. Thank you so much. Please join us for dinner and drinks this evening. gentlemen, a quick announcement. We have a wonderful performance up next by none other than a great folk artist. He is here with his entourage. Mami Khan is here to perform for all of you. It'll just take us 20 to 25 minutes to set up the stage. While that is happening, you can enjoy your drinks and networking time. And then in about 20, 25 minutes, please come back again for the one.